Welcome to Nasdaq Trade Talks, where we meet with the top thought leaders and strategists in TradFi, digital assets, technology, and financial planning. I'm your host, Jill Malandrino, joined by Andrew Lum, Head of Global Private Wealth at Norton Rose Fulbright. We have Dr. Merav Ozair, Global Leading Emerging Technologies Expert, Morgan Krupetsky, Head of Institutions and Capital Markets at Ava Labs. Finally, we have Poppy Simpson, Senior Product and Content Manager for NETGEAR's Meural product line, and they join me to discuss the use cases, advantages, and challenges of blockchain and related technologies. Panelists, it's great to have you with us. Welcome to Trade Talks. Let's kick off with a roundtable here, starting with you, Andrew. When we think about 2023, what were some of the more compelling stories around the space this year?
Yeah, so I think really what happened is that the industry is growing up a lot, and there weren't nearly as many price movements in 2023 as we've had before, except maybe for the last month. And so that gave people time, I think, to sort of slow down, work on interconnectivity, explore new use cases, working with traditional finance, and kind of just pausing to take stock of the last 5 years and then figure out how to move the industry forward.
Yeah, I mean, Merav, it really does feel like it matured a bit.
Yeah, I mean, I just wrote something that's called regulated tokenized assets, which I think that's where the trend is right now. I mean, you see a lot of institutionals, traditional institutions like JP Morgan, Citi, UBS, even London Stock Exchange, SWIFT. I mean, they're all doing all kinds of projects, international and national. So it just says something that they are interested, maybe in a more of a regulated type of environment, which is okay. I mean, we have to start somewhere. So let's start with the regulated use cases and go from there.
I think to that end, and tying back to what you mentioned, a lot of what we've seen this year from a financial institution enterprise perspective is our partners looking at the technology and the various use cases that it can enable, as opposed to looking at crypto as an asset class. So to that end, I mean, from a macro perspective, we went into this year, it was a pretty bleak picture, but what we actually saw was, it felt like this time was different from an institutional adoption perspective for a variety of reasons. I mean, you had greater kind of enterprise-grade infrastructure in place this time around as opposed to the last cycle. You had rates in the real world going up and the value prop for pure on-chain DeFi going down, and therefore the need to put real-world assets via tokenization on-chain. And you had finally major Wall Street executives touting the future as tokenization. Right. So I think collectively there was like a perfect storm to really drive forward the future of finance or on-chain finance in a variety of these different ways with some of the partners that you just mentioned.
Yeah, I mean, I think we have to start with them because once they get in, everybody else join. So it's good to see that they're coming.
And from a creative and cultural perspective, which is where I really come at this, working with Meural and NetGear, I work with artists and collectors and audiences. And they were there at the very beginning, back in 2017, when the first CryptoKitty was sold for what, 250 Ether, which was $100,000 at the time, and everyone was like so confused. But now they're less confused, right? So even though the NFT, and I use NFT in air quotations, it's really digital, native digital art backed by NFTs. Right. Even though that's got a bad rap this year, it's been a great time for building. And artists and collectors, museums and institutions remain really interested in how this technology opens up new creative and commercial opportunities for the kind of creative class who were at the vanguard of this technology right now, and now are trying to get more sophisticated models that you're going to see in the finance sector kind of grow as well.
I mean, it comes down to when people are now talking about AI and the copyrights, and all of that, and I said, wow, why won't you NFT it? And then you can protect your copyrights, basically.
Well, let's talk about that some more. And Andrew, you noted, let's dispel some of these definitions and what these things actually mean. Why use NFT or blockchain technology in the creative or financial services space? I think there's a lack of understanding, and all these terms are just like lumped together.
Well, and I love, so Poppy, you said, backed by, right? And so, it's a technology that lets you do things. Right. It doesn't do things itself, right? So you can't just say, okay, I'm going to take this blockchain off a shelf and now it's going to solve all my problems. Blockchain is, we were talking earlier, I've been saying it's a database. Really, it's the index to a database, right? But it's a way of storing and organizing data, and you can have blockchain without tokens. Right?
Exactly.
And so that's just a distributed ledger that different people, either with permission or public permissionless, can go in and search for the information using that index and find it that way. So as a tool, it can give you transparency. It can give you a distribution of control over the information, which, that's when people say, it can be trustless.
Right.
So it gives a powerful tool to run projects on, and so different use cases. But blockchain in and of itself isn't a use case,
No.
and tokenization in and of itself isn't a use case. It's just a way
Exactly.
to do other things.
You have to think about it as technology. Technology is a tool. It's a tool to do all kinds of things. I mean, like say AI. But AI is just the technology. You can do a lot of applications with that. Same with blockchain. It's just a technology. You can have like the NFTs, whether it's artists or authentication for documents, authentication for even a financial product. I mean, it could be authentic. It could be a lot of things. So, and as you said, it's just like I mean, a lot of people. I mean, when you said database, a lot of people think it's a database. It's not a database because that's not the purpose of blockchain to be a database. I mean, it can't. It's a pointer.
Foundation. It's a foundation.
Yeah,
on which you
but
can
it's
build.
a pointer. It's a pointer to where that artist creation is. Yeah. It's a pointer to where that financial product is. It's authentication to where whatever you want to authenticate, and it makes sure that it has records. It's transparent, traceable, immutable, and trustworthy.
Right, and if you look at the composition of this panel right here, right, we're talking about financial services, we're talking about the creator economy, and the technology is a technology. It doesn't differ from one area to the other, and I think that's one of the keys where we saw more institutional adoption and more integration is the interoperability of the technology has significantly improved, certainly since 2017.
Right.
Yeah, I mean, fundamentally, even though we're all in very different sectors or have different interests, what we're talking about is using a technology to enhance and sometimes transform existing processes and existing transactions. And so a real world use case is obviously for creators. They can benefit from a primary market, but now potentially also a secondary.
Right.
And that's really exciting. But to your point, interoperability is so important because it expands the market. It expands the ecosystem. This is all connected.
I totally agree with that. And I think taking a step back, it's really an enabler for a whole host of different industries. Right. And I think something what you were saying is, at the core of it, the blockchain enables this common kind of data standard and uniformity across, frankly, any industry or company or client or third-party service provider that historically has worked in silos and siloed systems that oftentimes require kind of manual reconciliation, and manual reconciliation is often error-prone. And so obviously that can be applied to a whole host of different applications and industries, some of which we already touched on.
And I think interoperability is a key, and I think that blockchain could be the enabler for that, because that's how it was built, if you think about cross-border and everything. And that will open up a lot of doors for everyone, whether it's creators, financial, etc. And what I like is that there are all kinds of pilots that we see with even financial institutions, that are looking into interoperability, whether it's SWIFT that just had a project that looked at interoperability. We have about 4 major regulators that came together to understand the interoperability of between countries. I think we have Switzerland, Singapore, UK, and Japan that create this forum. So I like that I see that they are thinking in that terms, that will open up.
So we're talking about the advantages and use cases here, but Andrew, you noted that there are some challenges. If it appears to make obvious sense to employ this technology, what are the challenges? What's hindering continued adoption, particularly from the legal perspective?
And so some of it, we were talking earlier, it's still just about the vocabulary. Right, so when you say the word token or blockchain, people have a kind of knee-jerk reaction to that. And if you are, let's say you are securitizing a royalty stream, but you're tokenizing it because you're using blockchain technology to track the records for that, right? So is the token a separate security from what it represents, or is the token the security, or is the token simply a digital representation of the security, the way a piece of paper stock
It sounds like a derivative,
Yeah.
right? There's derivatives of
maybe,
stock.
It's not a derivative.
but it might not.
Exactly.
So maybe it's a derivative, or maybe it's the thing itself.
Exactly.
Right, and that question, there's a legal analysis to that, but then there's also a business analysis to it and a plain English, ordinary language analysis to
and
that.
a piece around market education
Exactly.
as well. People understanding what you're talking about. NFTs got such a bad rap this year, but if you think about it, I really remain bullish on digital art. Like serious digital art is going to rise out of the boom of NFTs, and that kind of market correction is appropriate. It was madness, and now it's not. The skepticism that you see is often really just about misunderstanding, right? NFTs will help museums know about the provenance of the artworks that they collect. Like that's a use case that's obviously going to be adopted at some point, but the skepticism is kind of around these areas of misunderstanding and confusion.
Right.
Yeah, I think also to that, to the extent that we can talk about it in a kind of use case first or business first approach, and then kind of say this is enabled by the technology. I think that resonates with a lot of our partners a lot more so than kind of putting that in their face. Yeah. So definitely the education component, and from a regulatory standpoint, when we talk about tokenization, I mean, a lot of the things that we're talking about as it relates to tokenization for financial assets, they're securities. So there are existing laws, rules, and regulations that govern securities, but I think to your point, it's in terms of that record of ownership, where does that lie? Is one question that I think is still unanswered. And then in terms of being able to facilitate a lot of this kind of interoperability, as well as really bringing finance on chain, a lot of it actually at this point isn't technological challenges. A lot of it's regulatory in terms of jurisdictional uniformity from one jurisdiction to another, and that's a problem or a challenge in Web 2 or in the traditional world still.
And if you talk, whether it's London Stock Exchange or JP Morgan or Citi, they will all say, oh, we already have a technology, we're just waiting for the green light from the regulators. Once they get the green light, we can just, push it away. And so it's there, we just need to be approved, it's okay to do it, no one is gonna come at the door and knock on your door. That's what they're waiting for. That's kind of a hurdle a little bit, especially in the U.S.
It's a huge hurdle. We can't get legislation passed on daily topics that the broader audience understands, and we're seeing the brain drain of blockchain and technology talent leaving the U.S. for those reasons. We were seeing companies domicile elsewhere for those reasons, and we don't have the luxury of time, because if you think about it, economies are becoming digitized. It's happening now. Cross-border payments exist. Billions of people use this technology and don't even think twice about it. It's like another app for them, right? If we built the most robust capital markets here in the US, right, why would we not want to be at the forefront of the next iteration of the capital markets? I think it's a big concern that we don't have the framework in place for a number of reasons.
Yeah, I think also part of that is at this point, from a financial institution perspective, a lot of them are kind of parallel processing on-chain and off-chain processes because we don't necessarily have this clarity. And then, to be honest, a lot of the incumbents out there, it will be costly to really kind of re-architect certain systems and certain kind of ways of working. And so, from an upfront perspective, of course, there's a cost associated with it. But to your point, the world is kind of moving ahead, and there's a lot of startups out there that are working to either disintermediate or really kind of drive this space forward in the interim.
But the incumbents are there. If you think about the big ones, the JP Morgan, the Citi,
oh yes,
the UBS,
we are working with them.
I'm sure that you're working with them. They are the incumbent, right? And they do have it. They already have the rails and everything. They built everything. As they say, we're waiting for the green light from the regulator. Just say yes, and we are on it.
Right, because the fact of the matter, especially U.S. capital markets, our institutions are regulated. There is no getting around that. So, regardless of where we are in the integration phase, those laws are always going to exist.
And so, it's interesting, Morgan, you mentioned disintermediation just now, and earlier reconciliation of records, right? So, there was a time where people wrote on paper, right? And maybe you had a calculator, you didn't, right? And as we've evolved from that, we went through similar kind of intellectual upgrades and similar fears when you went from a paper record that someone walked it down the street for reconciliation and walked it back to be able to fax it, to do it, completely digitally. And people did have a separate set. And I think part of what we're dealing with right now is the regulators' concern that the system won't function as intended, that maybe it's too new, maybe it'll break. And so how do you maintain the safety and the security of the financial markets if everything moves right away onto a new technology and something turns out unforeseen with that technology?
I read something, I forgot, who wrote that, but it was interesting to say, that it's kind of hypocrisy for that, for regulators, because in fact they're using technology. They're in everything that, in every dimension that they work on, from the investigation to everything else, they are using it. But it's as if, we're using it, but the public or the private sector is not allowed to use it, and it has to be controlled.
Yeah, but think about it this way. We used to have physical stock certs, right?
Right, exactly.
Now everything, digitization of the markets, whether, on the exchanges or, look at the platforms that retail investors have now. They did not, we didn't even have those tools when I got into institutional trading in the late 90s. It's like night and day, but look at what that digitization has provided. Democracy in the access, accessibility, way cheaper costs for the average retail investor to get in. So that was progress in terms of, at least for the retail investor. Clearly there's benefits for institutions as well, but perhaps this is the next iteration of that.
It absolutely is, right.
And tokenization can make it even cheaper and cut costs even more.
And faster.
And faster. Faster, cheaper, and more secure.
Part of it is also that the potential is so clear and the technology can accelerate so fast, but these things do take time. And so it feels often like a very frustrating, and that's why you see creatives at the forefront, because they get to innovate faster and messier than these kind of institutional
and they don't really think about regulation. They think about just do.
Yes, and they also think about innovate.
Exactly.
So not just existing processes, but like how can we do something new and to move it forward. So it's messy, and everyone's at different it feels like everyone's on slightly different speeds.
The crypto native industry obviously moves at a very quick pace, but I think people forget it took, over 25 years for the ETF to really gain kind of mass adoption and gain trillions in AUM. And so, a lot of people tout tokenization as kind of the new version of the ETF. And, I think obviously institutions are moving ahead, but we're still early.
Right, we definitely are still early. And speaking of early, we've got about 5 minutes here. I want to get everyone's outlook when we think about 2024. We're coming into a U.S. election. I'm sure we're going to hear about, digital assets are going to come up in some part of the debate. So that's one thing to think about. And then as you continue to see more adoption, more integration, again, roundtable. Andrew, let's start with you. As you think about 2024, where are you going to be focused?
Yeah, so I think it's these more institutional projects coming out publicly, and I think you're going to get questions about the U.S. competition with other countries and where does that all fit in, regulatory harmonization or divergence as different jurisdictions try to compete with each other, whether it's for talent or products or just investment. And I think all of these trends, just a better, more sophisticated conversation around the technology, I think that we've seen in 2023 is going to continue into 2024, and hopefully that leads to whether it's greater clarity or certainty in the regulatory landscape that then lets people go ahead, with everything that they've got. Cooking right now.
Yeah.
It'll be neat.
Merav, your outlook?
Well, it's kind of like not so good for, the innovators, when we're getting into an election year, because legislators usually don't do much. Sorry for saying that during that time, and it's a little bit because we need that. We need to get clarity from the legislators, but I don't think we're going to get that this year. But it's not going to stop us, and we shouldn't stop us. We should continue innovating, and whether it's creators and digital art or financial institutions or anyone who thinks about it, we shouldn't stop innovating just because the legislators are now taking their time. We do have things happening also in EU and everywhere else, but the way that I always say to innovators is that if you innovate responsibly, because what is responsible innovation? It's basically making sure that you benefit from the new technology without creating more problems.
And
right?
that's, of course, what the industry is looking to do to solve problems. Morgan, from the capital markets perspective, your outlook.
Yeah, I think just in general, whether capital markets or enterprise, we'll see more real-world use cases, bringing real-world utility to those end users that are currently not inherently using the technology because there's a cool app, whether it's in SocialFi, in financial services institutions, and loyalty rewards in Deepen, whatever it is, where the technology is the enabler, and oftentimes they won't know or even care that they're using blockchain.
Yeah, and last word, Poppy.
Well, I would be remiss if I didn't say that I believe that digital art is going to, I do think that the sector's going to grow. I think digital art's here to stay, but in a new way. It's going to join the traditional canon, but you're also going to see a new class of digital collectors, and that's because that real world use case is already here. You can already get native digital art backed by NFTs, and you can show it at home. You can share it in galleries. So I think you're going to see that sector slowly stabilize, a smaller amount of artists and more institutional buy-in, but I think it's going to begin to grow again.
All right, we appreciate everyone's insight. Thank you for joining us on Trade Talks, and thanks for joining me from MarketSite. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.